Do we have a clear view on where inflation goes from here?
I don't think we were ever going to be super clear on the impact that tariffs have directly to inflation. When you're looking at an inflation forecast, you can certainly look at which types of goods are receiving tariffs, how that might roll into the total number. But keep in mind, there is a bigger geopolitical context that's changing as well with respect to how goods are sourced, where supply chains are moving. That started during the pandemic, if not before. And so I think the conversation around tariffs and uncertainty and what it means certainly for the deficit is very reasonable, but the specific pass-through to consumers, I don't know that we were ever really going to have a great number on that.
So in terms of the deficit, you're saying this is revenue that maybe is going away that could have helped to cut back the U.S. deficit? Or no, or yes?
That's the concern. Over the last couple of days, to be honest with ourselves and really any investor that I've been speaking to, most folks' range of average effective tariff rate was somewhere between 10 and 12 and 15 and 16%. Okay. And it looks like that's where we're likely to net out regardless of the authority used for those tariffs. And so that likely means we don't have a huge change in deficit assumptions, really. And the activity we've seen on the curve, I think, suggests that the market agrees with that.
What about other inflationary pressures in terms of the president's big spending bill that he sent, that was passed last year? So is that kind of tailwind for the economy, and that's inflationary, in the long run? Tell us about kind of how you're gaming out inflation for this year.
Yeah, that's really where the rub is.
Okay.
If you look at the broader economy picture, you have, of course, tariffs and that tax on the consumer. Again, difficult to handicap, but we know it's there. Same is true of global supply chains and geopolitical challenges. And certainly these fiscal tailwinds that we see supporting the consumer likely mean that prices are going to continue moving higher. Now, it's my view, and we've talked about this a bit before, that a strong inflation print a couple times in a row is probably one of the more disruptive events for this market pricing that we could see. However, it's not clear to me that that's going to be the mechanism that disrupts the market here in the next couple of months. I'm watching for it, but it's not in our base case. What I think, though, that affordability challenge creates, talk a lot about how we don't really see that in the market. I don't know that I agree, because a lot of the spending and more, I'll call it populist leaning policies from both sides of the aisle that we see are a reflection of knowing that the average American is struggling with affordability.
What?
We only have a minute.
I know.
2 minutes left, and there's a lot that we want to get to.
Yeah.
Okay, so I want to get to a little bit of your view on AI and productivity. We don't have time to play the sound, but there's a lot of people talking about this right now. And I mean, yesterday, IBM was the latest example of what happens to a stock that people think is under threat from AI. The productivity side of this, how do we look at that?
So here's the real answer. None of us know. Certainly none of us in macro world know.
You're in good company saying that.
Certainly none of us in macro world know. Look, the way that productivity will be garnered from this technology is much more closely in the hands of the technology actors than in the macro and investment space. And so what we're all doing is crafting our scenarios. And one thing I'll say about our high uptake, medium uptake, low intake scenarios, they're all disruptive.
Yeah.
And so I think what we need to focus on, instead of the specific winners and losers, which I think are too early to identify, it's how do you get more accustomed to that disruptive market where leadership is changing the way it has been pretty regularly.
I think it's tough. And I think, the caveat is, and you are not alone, Lauren, everybody says it's early on. We don't really know. And that even the research report that came out yesterday, that it's just too soon to kind of figure out winners and losers and the impact. I mean, we did Fed Governor Chris Waller talking today about the U.S. Central Bank moving towards a system-wide deployment of AI across regional banks and its DC headquarters. But that's, again, it's a tool that everybody's playing with.
Yeah, we should hope that they are, right? Everyone,
yes.
The more we use AI, the more unfireable I botched that, but the better it is for us.
Your job is safe for today.
Someone in the world said, if you're not using it, you've just got to start. Otherwise, you're behind